Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily Video. I hope you're having a great day today and the market is treating you well. We are coming through kind of a volatile day in the markets overall, especially with the news of the fiscal cliff stuff. It seems like when we have one politician talking, then the next one comes right in and says something different that causes the markets to get real choppy. So with that, we need to recognize that our risk level needs to be in control so that we don't sit in something when there's a lot of volatility happening there. One of the good things about the simple trading method is it really looks at multiple things coming out. And what I mean by that is it takes into consideration the trend, support, and resistance. And so all of those things really make it so that we can have confidence in the consistency of what's going on. So, for example, as we look at the Euro-Dollar 15-minute chart, we can clearly see that the trend has been up. Now, when we would have known that will depend upon our rules for what we're trying to accomplish here. But overall, you can see that this is moving up, and we may use moving averages or price action or reverse of trend and those types of things. And then what we want to identify are pullbacks within this trend. And you can see multiple times where we've had pullbacks. And then we look for the highest high of the last three. So we could have gotten in here, in here, in here, based off of that. Our stop losses then are going to be placed, below the swing low. And then our targets, we're going to have some predetermined area where we're going to exit our trade. All right, so that's kind of what's happening, but a lot of volatility across the board. And so if we look at this movement here on the 15-minute chart, we're up 120 pips on the euro dollar. Aussie dollar, interesting enough, during that same time has dropped off. And here we have seen, correlated pairs that are not correlated anymore. And that is something that we need to be careful about, because the correlation in the past is no longer there. So just because one is going up doesn't mean that another is. But you can see choppy movements, a little less deliberate in its trend. Here's the U.S. Swiss franc, nice downtrend, looking for those pull moves back up towards resistance would be the play there. Look at the volatility in this. Some news came out, and we're seeing some added volatility. You can see this big move, this reversal of what happened there. Pretty flat. We're consolidating pretty strongly here on the U.S. Japanese yen. Look for a breakout on that. And last but not least, we're seeing a downward movement of the CAD. So as we identify what's happening, and remember, the more we practice, the easier this becomes to identify. We're just looking simply for the setup conditions to occur that would allow us to take a trade in the direction of the trend using those rules for the simple trading method. When the market's volatile, and we talk about this quite a bit, we need to make sure that we don't get into positions that are bigger than what we might normally do because of the volatility. So cutting our risk back from 1% to 0.5% or from 2% down to 1% is a a smart thing to do from the standpoint that we're able to control our risk. And again, we can't control the market, but we certainly can control how much we put into the market to play with. So with that, we will wrap it up. Have a good trading day. Be safe with your trades, and we'll be back tomorrow to kind of wrap up the week and see how things turned out. So until then, we'll talk to you soon.